What is going on, boys? Let me get straight into this for you. No messing about. $1,000 day. The reason why it's only $1,000 is because it's the news events that we trade, and that means we just lower our risk just because they are a little bit more unpredictable. But this is the trade that we took, just under a 2-to-1. Very, very basic technicals here that we executed on. As you can see, we've basically called this as well at the bottom of the tick. So I'm very happy to catch a move like that every single time. So let's get into it anyway. So it's very obvious today that we were indeed bearish, mainly being because of this candle. As you can see, this daily candle here absolutely engulfs the other candles near it, giving us the inverse there as well. So clearly today we want to be looking to take shorts. Obviously that is what we want to do. Follow the trend as much as we can, because that gives us our highest opportunities for high probability. Just to back that up as well, as you can see on the 4-hour during the London session and the New York session, we are continuously bombing down on the charts here. Haven't taken out all of the draws of liquidity as well, so there's still room for this to go lower. Obviously, we've got some big fair value gaps that we could also bounce off as well. I mean, I'm not daft, I definitely understand that. However, when you actually look at what we took out and what we left behind on the lower time frames, the trade becomes a lot more obvious. So this is our New York Open. Very, very, very textbook shorts here as well. I'm not going to lie. The only reason why I didn't take this trade is because I wasn't in. I've been out all day, so I wasn't here to take the trade. Otherwise, this is just beautiful. Look at all that low resistance liquidity. Yeah. So getting into our actual trade, we can see here we've had a very nice retrace after, oh, what's happened there? A very nice retrace after taking out all of this low resistance. We then retrace straight back into, why does it keep doing that to me? Stop doing that to me, mate. Jesus. Right, so we take out all of this low resistance liquidity here. We then form this huge 30-minute fair value gap, which we retrace into, which is very important because we retrace right at the top, even on the last 15-minute gap here as well. Then we come down, bouncing into this gap. Now this is where it's a bit, you know, up or down. We're accumulating here, ready for probably the big move over the night session. But something we notice very, very simply here, right, is we create all of this low resistance liquidity, and we don't take out our other draws here. We leave them all there. We're just in between, and we create all of this low resistance. So when news comes, bearing in mind we've just created all of this low resistance liquidity for the past hour or so, we bounce straight up into our unmitigated 15-minute fair value gap. On the 5-minute, we tap into it, the highest one of the leg, and we reject that strongly, very, very quickly. On the 1-minute here as well, we get the inverse within 2 candles straight away, showing me we are taking out this drawn liquidity, all of this low resistance. This is what we're coming for. That's just what that shows me very, very obviously. So as you can see on the inverse here, I take the trade looking for that about 2-to-1 to the bottom of our low resistance. The reason why I didn't go for, you know, a huge trade all the way down to these sort of equal lows or anything like that is purely because 1, it's late in the day. 2, it's FMOC, so anything can really happen in terms of, you know, accumulations and volume before the big move. And 3, we're just not being greedy, right? This is our low resistance liquidity. This is our very obvious draw on liquidity. For me, this is all I need to take my trade, to take my piece of the pie and be happy with the day. That is all I'm looking to execute on. So yeah, that is essentially everything that we went for there today. If you enjoyed it, boys, give us a subscribe, give us a like, jump onto the Instagram and everything like that. I'll post these reviews every single day. But this is all you need to start using this continuation model for you to actually get better at trading. Also, I'm going to make a full 2-hour video breaking down the continuation model because I believe it's the most simple and easiest way for beginners to start trading. Peace out, boys.